Thank you very much for the invitation. I will present the case for Bolivia, which is a joint work with Timothy Quijo. Okay, so Bolivia reached its independence in 1825, but until 1952, it was a country that maintained the economic structure of the colony. This means it was a country that the structure of the economy was was controlled by landowners and private family miners. Okay, so among all the countries that we are studying in this project, Bolivia is by far the poorest country and one with the lowest rates of growth of GDP per capita. If you can see, between 1950 and 2010, Bolivia grew on average at by 0.8%. No? It had periods of during the 50s and during the 80s that Bolivia grew at negative rates of GDP per capita. It's also Bolivia during the crisis of the 80s. Bolivia shows also the largest drop in GDP per working age person. The percent drop in GDP has been of 25.4% between 1978 and 1986, and it also shows the highest CPI inflation rate, no? Above 11,000% in the year 1985. What is interesting in Bolivia is that we can identify very clearly 5 periods in this period that we call from 1952 until now. We call the modern economic history of Bolivia. We can identify 5 periods. The first period starts in 1952 and lasts until 1956, and it's called the National Revolution and Aftermath. Then we have the second period, which is a period that we call the Stabilization and Growth, which is a period of rapid growth that starts in 1957 and lasts until 1978. Then we have this period of crisis, of hyperinflation crisis, that starts in 1979 and lasts until 1985. Then we have a period of slow growth that starts in 1986 and lasts until 2005. And we have the last period, which is the period that starts in 2006 and lasts until our days, which we call the period of nationalization and growth. I will describe very briefly the main economic facts of each of these periods. The first period, which is called the National Revolution and Aftermath, is characterized mainly by the National Revolution, which is this National Revolution represented the nationalization of the 3 large tin mining companies and an agrarian reform. It's like an end of this feudalistic regime or this colony economic structure. It's a period also where we observe high inflation, which was driven mainly by the large fiscal deficit, mostly generated by this new state mining company, which was called Comibol. In fact, the government, in a way to subsidize this mining company, implemented a dual exchange rate regime where the government bought expensive dollars from exporters and sold cheap dollars to importers. This period ended with an stabilization program in 1956, which aimed to balance the fiscal deficit, the fiscal balance. For that, external support was needed to finance the fiscal deficit, and the United States was the major supporter. In fact, what is surprising here is why the United States government was supporting such a social revolution. But what is not surprising is that since 1952 until around 2006, all the economic programs and the economic policy in Bolivia was supported by the U.S. government. Then we have the second period, which is the period of stabilization and growth. This period starts with the first stabilization plan implemented by the end of 1956. This stabilization plan included the deficit of public enterprises in the government budget, established a mining royalty and new tariffs, and restructured the tax system. We call this period of rapid growth because GDP per working age person grew on average by 2.5% per year. In this period, external debt increased mainly to finance the public enterprises deficit. This is a period of characterized by a very favorable external context, where we observe rising prices of the main exports of Bolivia, which were tin and oil. Then we have the period of crisis. This is a period of the hyperinflation crisis, characterized by large external shocks, an increase in world interest rates, a cutoff from borrowing on international markets, and a drop in the export prices. The hyperinflation, CPI, increased by 11,750% in 1985. And here, this period we can divide in two sub-periods. The first sub-period that goes from 1979 until 1982, which is characterized by an internal political chaos that coincided with the onset of high international interest rates and a world recession. And we have the second sub-period that starts in 1982, which is characterized by the return of Bolivia to the democracy. So there is a democratic opening accompanied by an economic crisis. But this return to democracy was characterized by a very little internal support. So the new administration had very little internal support. There were a lot of social demands to the new government. So this government, as the government had very internal little support, it had to rely in the external support. And that's why the government decided to honor the external obligations for fear of punishment by the international creditors. This is going to be an important fact that I will explain in a minute. Then we have the period of the slow growth. To end the hyperinflation, a second stabilization plan has to be implemented. So, in 1986, the new economic policy, or Nueva Política Económica, which was the second stabilization plan, was implemented that aimed to reduce inflation and the external debt. So the priority of this new economic policy was the reduction of accumulated foreign debt, both by paying it off or by renegotiating it. No? According to the different creditors, the way Bolivia reduced its debt is different. What is important in this period is that structural reforms were implemented. These structural reforms were, for example, the liberalization of goods and financial markets, the implementation of the capitalization, which was the Bolivian scheme of privatization, a tax reform, commercial policies in favor of exports and foreign direct investment, and a fiscal decentralization, but only among municipalities. In this period, GDP, we call this period of slow growth because GDP per working age person grew only on average by 1.1% per year. And in this period, we can identify a slowdown between 1999 and 2003. This slowdown is attributed by many authors due to the credit crunch and to the Brazilian crisis. But this is something that has not been studied very deep in Bolivia. And then we have the last period that lasts until our days, which is the period of nationalization and growth, where the state now plays the leading role in the economy, the state, by being the owner of the main companies in the strategic sectors, like oil, electricity, and telecommunications. This is a period, like in the 60s, characterized by a very extreme, very favorable external context. This means that we observe high commodity prices, and this is a period of growth where the average rate of growth has been of 2.9% per year between 2006 and 2012. So, what are the questions that we aim to answer in this work? The first one is: did the government policies during the rapid growth period of 1957 until through 1978 plant the seeds of the severe crisis of 1978 through 1986? And second, did the Bolivian government's policy of paying off its foreign debt after the crisis have large social costs? In particular, did this policy dampen growth during the period 1986 through 2005? So what I'm going to present now is, I will present a budget accounting analysis. I will present very briefly I will describe also the debt evolution policy in Bolivia and the fiscal policy in Bolivia, and then I will end with the budget accounting exercise proposed for this project. So let's start with the growth accounting. So as this is the typical growth accounting of Kehoe and Prescott 2007, where the advantage of this growth accounting is that we can see that on a balanced growth, the capital factor and the labor factor are constant, and growth in GDP per working age person is driven mainly by TFP, by growth in TFP. This is the picture of the growth accounting analysis for Bolivia since 1950 until 2012. And we can observe three things here in this picture. The first one is that fluctuations in GDP per working age person are driven mainly by fluctuations in TFP. In the periods of expansion, during the expansion of output during the 60s and 70s, during the 90s, and in the last period, we can observe that even though the capital factor is going down, the expansion of output per working age person is driven by expansions in TFP. And in the early periods, we observe a decrease in the labor factor, but in the last periods, we observe an increase in the labor factor. So our goal is to relate deviations from balanced growth in Bolivia to shocks, to external and internal shocks, but mainly relate these deviations from balanced growth to the government policies. And we want to highlight the importance of TFP in determining the fluctuations in GDP per working age person. So let me describe now the debt evolution in Bolivia. Why it's important to describe the debt evolution in Bolivia? Because the ability of government to borrow in domestic and foreign markets and to negotiate the payment of the debt determines the way the fiscal and monetary policy interact. So it's very important to see the evolution of debt in Bolivia. I will focus on medium and long external debt. Why I will focus on medium and long external debt? Because in Bolivia, internal debt and debt denominated in domestic currency starts to be important only since 1988. Only since 1988. And mainly since 1996 starts to be important because the government started to issue internal debt in local currency to implement the new pension system. Most of the debt is also not issued also for financing needs. Most of the internal debt is issued for to control the monetary liquidity in the economy. So that's why it's not very important. If we look at this period from 1960 to 2005, it's not important to see the internal debt. This is the debt. This external debt is also issued in dollars, mainly in dollars, as we will see in a minute. So in the first picture, we can see that the large jumps in the ratio of external debt over GDP occurred as part of the two stabilization programs. The first stabilization program in 1956, and the second stabilization program in 1986. We can see also in this picture that in the last period, since 1986, there is an important reduction of debt in Bolivia. In fact, if you look this picture in 2012, almost all external debt has been reduced in Bolivia through different mechanisms according to the different type of creditors. If we look here we have the composition of external creditors as a percentage of total. We can see that during the 60s and during the 50s, the private debt was important. This private debt was debt contracted with commercial banks, and this debt has been reduced through a policy of buyback this debt. So this debt was repurchased in secondary markets. The bilateral debt has been also important during the 80s and during the 90s, but it started to be reduced, and it has been reduced mainly through going several times to the fiscal to the Paris Club, where the Bolivian government renegotiated this debt with the other bilateral governments. And the multilateral debt, which started to be important during the 90s and the thousands, is a debt that has been reduced through two programs. The first program is the HIPIC program, which is this program that was implemented with these high indebted poor country programs, where Bolivia also participated in this program. But it was mainly reduced through a total forgiveness of this debt that was implemented in 2006 through a program called the Multilateral Debt Relief Initiative. With this program, almost all multilateral debt was forgiven to Bolivia. So that's something very important if someone wants to understand, for example, why Bolivia now is growing. Bolivia is now one of the the country that is growing more faster in South America. And why is that? Because the new administration of Evo Morales started almost with no debt, because all debt was forgiven in 2006. So that's something very important to explain now why Bolivia is growing fast now in these days. No? In this picture, we can see that during the 60s and during the 70s, net transfers from external lenders were positive. But what is surprising here is that during the period of crisis, which is this period of hyperinflation crisis, net transfers were negative. This means that Bolivia was, even though Bolivia was going through a severe crisis, Bolivia was transferring resources to the external creditors. And why is that? As I explained it before, that's why the new administration had very internal little support, so it had to rely on external support, and so it was paying disciplinarily its debt. So we can see also increases in external debt over GDP in 1956, and to a lesser extent between 1985 and 1986 were due to real exchange rate depreciations. We can see here that during the 60s and during the 70s, the Bolivian government implemented a fixed exchange rate regime. So this means that we observe a real exchange appreciation. But then, since 1970, 1982, we observe a real exchange depreciation, which is a sign of a major sudden stop, which is corroborated by these following pictures. In this following picture, we can see that Bolivia passed from net exports as a percentage of GDP, passed from being negative by around minus 8% to a positive percentage of 14%, and then decreased abruptly. So this is also a sign of a major sudden stop that occurred during the mid-80s. The implementation of the two stabilization programs were done when inflation reached high levels. The first, in particular, during the 80s, inflation reached a level, the percentage change in CPI was above 11,000%. Okay, what about the composition of borrowers? Who were the main borrowers from Bolivia? During all the period analyzed, we can see that the general government has been the main borrower of Bolivia. So this means that if we look to the data of the general government, we can see what happened, why we can understand the evolution of the Bolivia's external debt. But the state-owned enterprises have been also important during the 60s and during the 70s, and the central bank has been important during the 80s and during the 90s. But what happened to the general government coincide with the implementation of these two stabilization programs. You can see that the peak, this peak in the borrowing of the general government in the 1956 coincide with the implementation of the first stabilization program. This second peak in 1986 coincide with the stabilization of the second stabilization program. And this peak does not coincide with the implementation of an stabilization program, but it coincides with a change in the economic structure of Bolivia, because this is in 2006 where the economic structure of Bolivia changes from a market-based economy to a state-based economy. To describe some of the characteristics of the debt of the external debt in Bolivia. Here I show a picture. This picture shows I have compared the data from the World Bank. This is, I think this is a new data set, which is the international debt statistics. And I have also this data from the Bolivian Central Bank. The Bolivian Central Bank gave me all the credits that the Bolivian government contracted since 1960 until 2010. I have this data set for each of these credits. I have the maturity, I have the interest rate, so I have calculated here the average interest rate, and I have compared with this data from the World Bank. So if we look at the interest rates, we can see that they almost coincide. So interest rates increase during the 60s, during the 70s, reach a maximum value for the Bolivian for the data from the Bolivian Central Bank around 1981 or 1984, and for the World Bank data around 1983 and 1984, but they coincide. But if we look at the maturity of debt, we can observe some divergence between the Bolivian Central Bank data and the World Bank data. According to the Bolivian Central Bank data, we can see the maturity. This is also average, the average for each year. We can see that the maturity of debt decreases until 1986, then remains constant between 10 years and 15 years, but then starts to increase the maturity. But according to the World Bank, it decreases until 1981, 1982, then increases and remains constant between 25 and 30 years. For me, it's more real to think, I think that the Bolivian Central Bank data is correct, because if we think that during the hyperinflation crisis, Bolivia could contract debt under more severe conditions, we can think that this means that maturity was low and interest rates were high. According to the debt denomination, if we look at here, we have the picture only for the World Bank data. We can see that most of the debt was denominated in dollars, which is this green picture here. During the 90s, we have an increase in debt denominated in multi-currencies, but then started to decrease, and again, debt denominated in dollars is the most important debt for Bolivia. Let me now describe the fiscal policy. So if we look at fiscal policy in Bolivia, we can see that during almost all Bolivia's modern economic history, the government ran chronic deficits. Only now, in these last years, is that we can observe a fiscal surplus. But since 1952 until 2006, almost all the years, the government ran chronic deficits. I will show data for the general government that includes central and local governments, but excludes public enterprises. And this is going to be important for the budget accounting exercise. What is something that you have to keep in mind is that government revenues were highly dependent on international prices of export commodities. This means that when the prices of export commodities were high, government revenues were high. When export prices decreased, government revenues decreased. So, and when government revenues decreased, the government had only two sources to finance its deficits: the external borrowing and printing money. This is the picture of the general government expenditures and revenues. Here we can see that expenditures as a percentage of GDP have been always above revenues. This is the period of the crisis where the gap between revenues and expenditures increased. If we look at the global and primary deficit of the general government, we can see also that the primary deficit and the overall deficit increased during the hyperinflation crisis. The deficit has been around minus 17%. This coincides with a reduction in exports in Bolivia, with an increase in the service of debt, and with a reduction of the disbursement of debt. And this leads us to the to this picture, which is this is the picture for the non-financial public sector. That includes also public enterprises. And here we can see that during the 80s, when the deficit of the non-financial public sector increased, this deficit was mainly financed by seigniorage. So this means that the government relied on the inflation tax to finance its deficit. And here we can see when the government relied to the inflation tax to finance its deficit, and the inflation was increased, what happened in Bolivia is that people started to use dollars for all its transactions. And in 1982, the government trying to stop this using of dollars and implemented a de-dollarization program, which obviously was not successful, and it generated only an informal dollarization. So that what was also important to see in Bolivia is that Bolivia has been, or started to be, since 1984, a dollarized country. That dollarized increased since 1984 to almost 90%. If we look at this ratio of deposit in dollars over total deposits, we can see that the dollarization of Bolivia reached almost 90%. But it started to decrease until our days. And the government hopes to de-dollarize completely the economy. Okay. So let me finish with the budget accounting exercise that we had to present in this project. As we can see, as we have seen, most of debt in Bolivia is external debt and is debt denominated in dollars. That's why we modified the budget equation, including only external debt in dollars. So we are excluding debt, indexed debt, because in Bolivia we didn't have external debt, indexed debt, and we excluded also debt, internal debt denominated in local currency. As I mentioned it, because internal debt denominated in local currency has been important only since 1988 and only since 1996. So we excluded these we included only external debt denominated in dollars. We also include here, we divide here the general government deficit and the public enterprises deficit. Both represent the deficit of the non-financial public sector. And why we divide these two, the deficit of the non-financial public sector? Because we only have data for the general government deficit since 1952. So that's why we are computing the deficit of the public enterprises as a residual. The good data in Bolivia starts in 1990. Before 1990, we cannot find good data or reliable data for Bolivia's economy. So we compute this as a residual. Here I am presenting the accounting results for this period, which was the period of slow growth, for the period of crisis, and the period of this is the period for stabilization and growth, the period of crisis, and the period of slow growth. And I'm showing also the accounting exercise for the last period, just to highlight some of the problems that we have found by computing this as a residual. So what we can observe. For the first period, which is the period of stabilization and growth, we can see that financing needs were on average 1.2% of GDP, and half of them were covered by seniors, and around 32% were covered by external debt. The general government deficit and the public enterprises deficit shared an equal proportion, and together they contributed to by 4.4 percentage points of the financing needs. These needs were highly balanced by negative returns of debt of minus 3.2 percentage points. In the period of crisis, this picture changes a lot. Financing needs increased up to an average of 5.9 percentage points. The constraints on external financing made the government to finance the overall deficit with seniorage. We can see that seniorage increased from 0.6% to 7.5%, which is also something that we have seen in the pictures. The external debt represented a negative source of financing of approximately minus 1 percentage points, which is explained by the fact that the Bolivian government continued paying its external debt, fearing of punishments by the international creditors. The main obligations, as we saw already in the pictures, came from the government deficit, from the general government deficit. This represented 8.4 percentage points of the financing needs that were partially mitigated by a close 2.5 percentage points of negative returns of debt and a small surplus of public enterprises of 0.15 percentage points. Then we have the period of slow growth. Here we can see this is the period displays the smallest financing needs, 0.8 percentage points. It's a period where important structural changes occurred in the fiscal balances, and that's why these needs were reduced a lot. The much smaller financing needs are explained by a much smaller general government deficit of only 1.5 percentage points. We observe also that public enterprises deficit contributed positively to these financing needs, 0.6 percentage points, and that's the reason why almost during this period also all of the public enterprises were privatized or capitalized during this period. If we look at the pictures for each year, in general, we can see that this proposed framework is very useful to explain Bolivia's modern economic history. Here we can see that seigniorage started to be very important during the crisis of the hyperinflation, as we saw also in the other pictures. We can see also that external debt started to increase during the 70s, since 1974 until 1978, which is the period where public enterprises need to be financed. Here we can see the public enterprises deficit started to be important also since 1974 during the last years of the 70s and the early years of the 80s. Here we can see also that the contribution to the obligations from the general government has been important almost all the time, and started also to be important since during the 70s and during the 80s, and also in the last period. So in general, we can conclude that the proposed framework is very good to explain the Bolivia's modern economic history. So this is the residual. This is something, as I already mentioned, we computed the deficit of the public enterprises as a residual. This is the picture of the deficit of the public enterprises. Why I say that we can observe some problems by computing this as a residual? Because if we look at the last period, which is the period that starts, this is the period that we call the period of nationalization and growth, we can see that the public enterprises deficit is very high here. So the contribution to the obligations of the public enterprises deficit is almost 6% of GDP. And this is something that is not very real if we look, because these are new enterprises, these nationalized enterprises. Most of these enterprises are not running through deficits until now. So this residual must be capturing other things that is not only the public enterprises deficit. And what other things could be this could be capturing this residual? For example, as already mentioned, in 2006, almost all multilateral debt was forgiven to Bolivia. So this residual has to be capturing this forgiveness of debt. So I think that we have somehow, in some manner, we have to include the forgiveness of debt in this budget accounting exercise. So what is next? What's next? What do we have to do in this research? And I said, we need archival research to obtain disaggregated data for government revenues and expenditures. But 1 week ago, I received this paper. This is a paper published in the Journal of Economic History by Pérez Cajías. It's published on March 2007, March 2027. And this is a new data set of the Bolivian public finances from 1882 to 2010 that includes current revenues disaggregated in direct taxes, internal indirect taxes, international trade taxes, and non-tax revenues. And this new data set includes also total expenditures disaggregated in general public services, public debt transactions, public order, defense, economic transactions, education, and rest of social expenditures. So maybe, I was thinking, we can use this new data set to improve this exercise. And something that we also need, I think we need a model that could link this analysis to growth. That is something that is missing in this version of the paper. Okay?
Okay, so I really like a lot the project. I think of kind of like different reasons to like it. One is kind of like more like very professional. I mean, very, a bit inward related, but sort of like to sort of discriminate between different ideas and different theories. The other one is because there are many experiences, mostly good to document, not to repeat. It's mostly like a sad story. The whole, everything is very sad in these papers. Now, I want to think more about my discussion, or at least I approach it this way. I'm not sure how would that's it, as a kind of like a referee report sort of thing, of things that I think will be valuable, and so as opposed to then also highlighting the ones that are already there. So I thought that, for instance, one thing that it will be valuable from this type of papers will be not so much something that will be what you could download from like a World Bank type of standardized data, very large number of countries, and somehow standardized definition. But instead of that, kind of like having something, that probably could have a continuous coverage, but also that it has institutional details and a bit of a unifying framework. And the institutional details are kind of important to understand that when you, so that's the type of thing, in my view, that it lacks when you go to the World Bank or the IMF, this type of data set. There's something that calls revenue. You can have a broad idea, but it's sort of, for many circumstances, that's kind of important. So anyway, so that's one. Also, if you are kind of, this is a bit from the region. If you're from the region, there is this sort of collective amnesia and fads from professional economists and policymakers about what will happen. There's this idea that these things are in the past, now there's new things, this could never ever happen. It's a very different frame of mind. And I want to touch on that to also, in one particular couple of examples, to things that, areas which I think that they could add more because it will be useful. I'll mention that as an example. So as I said, it's a kind of sad story of a stagnation and volatility. So just to give you an idea why I find it interesting, I have a quote here. Sort of like it's from some other paper. And this paper, the author is discussing this paper and he's saying that he's talked to some people, and this paper is some other time. It's not in the US, not even US time. Some people find it kind of weird. But then the author was thinking that no, it's kind of like okay, because the principles is a lot of extreme events, but they could be useful. And I took out that there was something there. So anyway, so I kind of want to think this way, and this is from the end of the big four inflations. So from Tom. So I think that like the model should be more like, and this is a super high standard, that paper and Friedman sort of. Anyway, I just want to give you an idea because it's going to sound more like a referee report. So, okay, so one thing that I found puzzling and interesting to find out more. How does the market for domestic debt work? Okay, ignore the complete, tiny reference to where they are. That's more from the authors. And so something in the denomination. This I think is kind of important for several reasons. One is because to understand the monetary versus fiscal, I think they kind of want to understand what is it the central bank does. Now they do know, but as a reader you will not find it out. So because if you are sort of very US centric, you think about open market operations. That's something else there. So that's actually detail that you may be like obvious to anybody from Bolivia, but if you're not from there, you don't understand what's going on. Imagine they are telling you there's no government debt. What is a central bank debt? How is it they conduct anyway? So you know, how is it the monetary policy was conducted? I mean, there is some hints. There is like a sentence about, well, but this is for liquidity, and but I kind of want something because it's kind of important, especially if you're going to think about monetary and fiscal policy. So that first in general. Also, if you start thinking about sort of modern theories that they try to discriminate these Ricardian regimes and non-Ricardian regimes or monetary policy, this is more for the very much insider in terms of, you know, jargon of sort of new models. You kind of want to, maybe it makes sense, maybe it doesn't make sense, these Ricardian or Ricardian regimes, but whatever, you kind of need to know this. So I think that will be very helpful to have a description of the institutional setup. And if it didn't happen in the past, it didn't happen. If it changed, that's actually super interesting. In particular, you know, I think the time of hyperinflation is one of the most interesting. That's why I had the quote from Tom. And anyway, so I'll come back to this. You know, again, so what is at the central bank? Well, they printed money. What did they do with it? I'm like seriously thinking, like, you know, they didn't do open market operations. Did they, like, you know, give the money, handed the money to a receipt to the, I mean, what's going on? So I mean, that's kind of interesting to think about how much is sort of monetary policy and fiscal policy. So as I say, there's almost no description of the monetary institutions. And I find that sort of, this will be super interesting. It has a very interesting history, in particular, you know, several stabilization plans. I'll talk a little bit more about it. There's not even data about monetary aggregates. Maybe that's sort of not, I think it will be very useful. So maybe it's not that in fashion now, but I think for this case, it will be very useful. You may think that these things have been discussed in the past. So since very recently when I learned I had to discuss this, and I did a little bit of reading, so you may think that you could read Sachs' AER paper or Sachs and Morales or other papers, the ones in the book by Rudy. But I think they could use some dust up these papers. I'll mention something. For instance, they talked a lot about you know, what happened during the hyperinflation. And they talked a bit about dollarization. But for instance, the paper doesn't even quote anything about, you know, this was it like a disaster in terms of output or not. So I was looking for some sentences to compare to the 6 countries, you know, to the countries in you know, is it like Germany that is sort of actually like expansionary? If you looked at Tom, even all the countries that Tom looked at, if there were some negative effects, were kind of minor. The other ones, some there were no data, and some were expansionary. And in particular, you know, sort of, if you looked at the literature, that's why I'm thinking that it will be useful. So I imagine that the authors didn't enter into that because they thought that maybe this was sort of known to everybody. So you go back and you read Sachs. You go back and you read Sachs and Morales. And then there's all these descriptions. So I want to give you an idea. This is happening. These papers are written a little bit after the hyperinflation, when it's clear the stabilization plan works. Say 85. Just want to give you, if you're from the region, you kind of 85. At the same time, there is very high inflation in Brazil. There is very high inflation in Argentina. There are different stabilization plans going on in Argentina and in Brazil. Sachs and Morales and people, they talked about why the experience from Bolivia is unique. And why only under these circumstances you will use the fixed nominal exchange rate, and instead in these other circumstances you really want to do what they call these heterodox plans, and it will be the example, the super apologetic Sachs. I mean, just read the AER paper, I'm not like making this up. So I mean, he's kind of apologetic because saying, well, this works here, but this should only work for very high inflation because look at how successful will be to do some other things that don't require all these changes. We actually know now how they, you know, how short-lived these plans were. It was unfortunate that they were writing at that time. So I think it will be kind of useful to more modern, to the advantage over Sachs, that was kind of the hero of the story anyway. But I'm just saying we have the advantage of seeing the different plans evolve and seeing that, well, he was probably beaten to death, that people told him probably that they had to say that this is only from Bolivia, that actually the alternatives didn't work out that well. So anyway, so I think it will be kind of useful to really go back, and now that we have kind of more of the time and experience, because there was this idea that fixed exchange rate will never work, only in these circumstances. And Sachs was talking, well, this is also special perhaps for Bolivia. By the way, the other hyperinflation that was stopped in very similar way is the one from Argentina, but this happened much later on. So Sachs only have Tom to rely. But imagine that people were, when he was describing, was telling him, well, same things that people probably told Tom, that they think is very strange. You shouldn't think that you could draw lessons to other countries, and he's very apologetic. So now with all this experience, I think it will be useful. And in particular, so I want to talk about this as an example of the reason why it will be useful. Now there is high inflation in several countries in Latin America, and if you go to the conventional wisdom, is that you don't have to do, so you go to Sachs and, well, you probably know. So the idea was you do it all at once. You need a nominal anchor. You need to have a change on fiscal regime, very much out of Tom's ideas, and it really was central in implementing that. The current conventional wisdom is the way you will stop inflation rates that are very high now in Latin America is you do something very gradual through inflation targeting. Because whatever, so there's no, so I just want to be, I want to press to the idea that it's not that really, anyway, so that in terms of the monitor. Now there are many other aspects that are very interesting. This probably I should do more in a private correspondence, but there's something about other stabilization plans, for instance, as he mentioned. The other ones were triggered with inflation rates that were low for Latin American standard, is 100. They are kind of relevant also. Also, they are relevant because the economy was not dollarized. So even some of the arguments of why this, okay, so I should say something for the more broader audience. By dollarize, maybe it was in your picture, it may not have been clear to everybody. By dollarize, what they mean is that the deposits on banks are denominated in dollars. By and large, transactions are in local currency. It is also true that prices were quoted in dollars. And if you looked at Sachs and Morales, he goes into the detail. That's why he thought it was important. But interestingly, in some other of the cases, inflation was much. It wasn't just the 84. There was much lower, and still very similar plans were successful. So I think just telling people kind of more institutional detail, and this will be useful. So I don't think it's. We have the advantages of seeing all the history that I think people that wrote at the time didn't. And again, I'm not trying to be critical of Sachs. It's the opposite. I think he was probably even forced to say that he was very special when. Okay, so other thing that I thought it will be useful to think about is sort of this experience is relative to sine stops. So there are kind of two large debt forgiven programs, but especially one that you could kind of see that is very sharp. And so he pointed it out at the end. So think about this like running a sine stop in reverse. So I think that sort of, it's not quite the same as running a sine stop in reverse, but it's not that dissimilar. It's really it's a big deal. I mean, it was what, like 60% to 15% like in a year and a half or something. It was really very. And I think the program is ongoing until so many years. So documenting this also in terms of this, it's kind of interesting in itself. Also, I think there were some questions. You saw the maturity of the debt was not that big. And you saw also that the debt went up right before in bad times. That's actually the opposite of a sudden stop. They were able to borrow. So I think that the sudden stop, if I had to say something, I would say that based on what I'm reading, the authors may know much more about Bolivia, but as myself as a reader, I would say this is a kind of not sudden stop story. I'm probably misunderstanding it, but yeah. My understanding of what happened is that, like in Argentina, what happened is not the textbook Krugman type of stuff that you export a lot with this exchange rate. You don't produce, you cannot produce the stuff that you send abroad. That's what makes exports to go down, but money comes in. So my understanding of what happened, say in 84 or so, is a complete chaos. These guys have to send some of the natural resources abroad. They're not able to take it out of the ground. So what happens is that exports goes down a lot. So the logic of a sudden stop is that borrowers require you to pay. So an alternative story is that you not get your act together to produce goods. And they may give you some money, but not enough to cover the shortfall of your production of tradables. They probably know exactly the answer, what is the narrative. As a reader, I cannot tell the difference. In fact, I could tell that all these stories that I'm saying that they cannot get their act together is from their paper. So, and from reading, if you Wikipedia something from that time, they'll tell you stories about that they couldn't get their act together, that it was really, anyway, I won't say that I read like, I didn't go to the library to read any book. I just, anyway, but regardless of that, the debt forgiveness happens later on, much later on, and it's also another example of a reverse part of a sudden stop. So I think that that's kind of interesting to give more detail because of that. Also, the paper talked a bit about sudden stops. Is, to me, either they give more information or otherwise it's not that clear. That's my point. Okay, so so these public firms, that's kind of important. So several things. First of all, how is that in this accounting, it's not clear to me by reading the paper, how is that the accounting, also this is fantastic. So you read the paper, and then they had to kind of invent words because the firms were private. Then they become public, private, public. So it's like it's not nationalization, re-nationalization. So there's several ways. So they make us some words to call them, it's really. So anyway, so one thing is not clear is how is that this impacts the public finances. Certainly it's not clear in the last period. So my understanding now, when they have, in 84, they sold a bunch of stuff. Okay, so they actually sold assets, which they were previously made public. They sold them. Now they bought them back. My understanding is that they nationalize it, and then, in some cases voluntary, in some cases through, because they went to court, they're paying this. It's not clear to me where this enters into the budget.
The payments.
The payments. And the proceeds. Because the proceeds, I think the way they're using it should enter into the return of the debt, like a negative return. But anyway, so this whole thing is not clear to me where they enter. I tried to read it in the paper, and from the paper and the appendix of the paper is not clear. But the current one must be important. And the big discrepancies occur that because they're obtaining this by differences, the big discrepancies, they occur at the end. So my advice is, just use the data that you have since the 80s, and just say that the data from the very beginning is less reliable, but use the base you have from the very end. So in fact, the most interesting period really is after the 70s, because it's really where the very, very big things are happening. So, but also you could invest now some time to look at exactly what happened with this. These are big things in this country. I mean, this sort of public, you have to think of this as like Norway or like almost like Kuwait or something. These natural resources owned by the government, it's a big thing for public finances. So I will do the opposite of what the authors did because of that. Okay, so there's a sort of miscellaneous. Something that was kind of mentioned also before, and this probably, not taxi, I meant to say tansy. But I guess it was spell corrected to taxi, Olivera. Sorry. So I meant, so the spell corrector. So this is probably like something maybe useful from these other countries. So this is also a bit of a Latin American thing. So only probably people from Latin America heard about this tansy thing. But then there's this idea that when inflation is high, your revenues lag. Okay, so, and I think Tansy made this up or discovered this or pointed out to this. Okay, so one thing that is also kind of told is that when you looked at stabilization plans, they start, and they actually also talked a little bit about it, they start by increasing the price at which they charge utilities. And so that's one thing. So a lot of prices go up. There's big devaluations. And then after that, nominal expenditures tend to be kind of more or less constant. And that's the way that budget adjustments happen. So, so one thing I can get is sort of, this is very much the opposite, no, of Tansey. So I think it will be good to kind of try to document this better. So the paper tangentially talks a little bit about the Tansey effect, but it doesn't really talk about the other one. And it seems to me that that's really the way that fiscal adjustment ended up happening. I don't have a theoretical idea of why it happens. It's in some Malinushian or something. But I think it will be great to document whether this sort of view is true. They talked a little bit about the Tansey effect, but okay, so. It's also true that they didn't really have a surplus until recently. So, but it's just that the deficit became smaller. Okay, that's one. The growth accounting is super strange, what's going on. So I don't know if you remember the picture. So it's a picture with output. Output really is level. There's no trends in Latin America. You can just do levels. And then it's sort of like, okay, so it goes up and down. But inputs, labor goes down like 40% at low frequency in like, 20-something years. What's going on? So anyway, I mean, it's really not so much the topic of the paper, but it's sort of like, it really caught your eye. I mean, what's going on? I mean, it's like, I presume the population is more or less constant, and this is something about participation. I don't know. So there's something more like a current, well, not current, it has happened many times, a bit of a debate of, you see all these countries in Latin America growing, and this is a time of very high export prices. Now, the impact effect is very small, because the impact effect, first of all, if you do base year prices, unless you change quantities, obviously nothing happens. But you see countries that grow a lot. So one hypothesis that people have is that there's a big thing in Latin America is this fiscal problem. It gets alleviated because the government either could tax its resources or they own them. So that's kind of the channel. Okay. So that's something that's not quite. It will be good to flesh it out more in the paper. It's something that is sort of people discuss it a lot in the context of all this kind, certainly in the context of this decade. And then there's particular details because some figures are not clear how they are constructed and which prices, then you cannot see that. But I could do that more in a private correspondence. But the point I want to make is kind of like one issue is that people say, well, sort of all these countries are growing a lot just because of the prices of commodities. But the price of commodities per se, that first of all, trade is small, and second, if you do base year prices, it has no effect. So that's kind of what is important. The hypothesis is that it goes through taxes. So anyway, so. And let me not talk about this one. All right.
So we broke the rules that Juan Pablo set out. So he's going to maybe want to chastise us because we went a little bit before the period he wanted to go and a little back. Now going before had this big cost in terms of the data. The data is from the 50s are a mess, but Bolivia as a modern country started in 1952, and how can you ignore that? Before 1952, it was like something out of a Garcia Marquez novel. It was back in the Middle Ages or something like that. So that's why we went back. And then what's going on now is just fascinating. So Paco and I were just looking at the debt numbers. So there's three big movements in debt for Fernando. And I think one in the 50s, one in the mid-80s, jumps up, and then it recently jumped down. And I think they're real exchange rate movements. And we got to work more on the denomination stuff. You're definitely right about that. The jumps up. The jump down is forgiveness. And then what's shocking is that it hasn't jumped up again. So whatever they're doing in Bolivia right now, the debt's not, it's not going up. This recent, after the last conference, Carlos Gustavo went back to Bolivia, and he's looked everywhere in Bolivia for every bit of data we can find, and I want to congratulate him in public for doing such a tremendous job. I noticed Juan Pablo was focusing on this. what's lacking, and I think people notice this, is better information on public enterprise, or public enterprise deficits and so forth. But I don't think we're going to get better data.
But I would just use the ones that you have until you run out of the data, and then I will, instead of doing consistently but missing it, I'll just use the ones that you have in the past, and then you say, okay, before 1980, this data cannot be trusted as much, but
Yeah, I would second that. Like, I remember the graph that Fernando seconded. It's like in the 50s. It's a huge drop. So it's like if the data's that bad, like, why are you showing it to us?
Right. Well, because the 50s is like one of the most interesting, if you start
But the
reading
data, you
Bolivian
can talk about
history,
the
it's
50s,
like
but
the
don't
most
show us
interesting
data.
period.
Don't show us the data or explain
or explain it, just
what's
the
going on.
best and then
The
explain
numbers
the.
are just, they look like nonsense.
So just to give you an idea of the 50s, because I see this as an outsider. Carlos Gustavo was taught by being, in a sense, Bolivian. So Bolivia had a war, a very unsuccessful war. But then the young army officers from all over the country kind of got together. There was really big Marxist influence, and they had this revolution. And they changed the country from being a feudalistic state. And, but they were very conscious that they had to keep on good terms with the United States. And this was during the McCarthy days. So if the United States said purge the Marxists from the regime, they did it. And then for the next 20 years, they were doing this social revolution while trying to keep the United States happy at the same time. Then they got all their money from the United States too. So it was, it's really fascinating period. It makes it very unlike anywhere else in Latin America. So that's why we want to have the 50s.
So Tim, there are two things. One is to talk about the history, and the other is to show us numbers.
Yeah. You know, the growth accounting, if we had just chopped out the first 10 years, would have
They
shown
look much
stuff,
better.
but you wouldn't get the wildness you get from the first 10
Why don't
years.
you do like Prescott McGrath and find some hidden labor that they want to cap?
Well, that's right. I mean, that's what we could always,
Probably do better going back.
can't
and
say this.
saying,
We can discuss that later. But when there's something puzzling, we could use the McGrath-Prescott thing. We'll just make up a new factor, and then it'll fit the perfect theory perfectly.
Yes. Do you have a theory of why the public public enterprise accounts are worse than the central government accounts?
Carlos Gustavo?
So you got two sets basically of government accounts. One is the central government accounts and some stuff, and then you have these public enterprise accounts. So to an outsider, that sounds both government accounts, but then you're right. You said that the public enterprise accounts is not really. Then you say some stuff about corruption. But those guys are corrupt. Somebody in the central government's letting them.
No, yeah, well, you can find divided by each type of parts of the government, for central government, local governments, municipal government, since 1980. But before 1980, you can find only data for the general government. But general government aggregated, not disaggregated in local government, central government, and municipal government. That's the problem. I tried to find, last time when we finished the meeting in Minneapolis, one of the tasks that I had to do was to find this data for the public enterprises. And I thought maybe I can find the balance sheets of these public enterprises, because there are only 4 or 5 public enterprises: the mining company, the oil company, the telecommunications, there was an airline also. But for example, for the mining company, you can find the balance sheets. But if you look at the balance sheet, you can, there is a library for the mining company or the Comibol, you can find the balance sheets. But the balance sheets are really a messy. They don't say anything.
What do you mean by that? Do they have like a balance?
Like-
Income, expenditures?
Something
But-
online.
Or you don't trust the numbers? I just don't understand that. I don't know what a mess is. I can understand that maybe what they call investment may not be investment, but do you think that the numbers for expenditures and income are not right?
Yeah, I think that. And that's something that the people that work on these companies told me also. You will see, for example, that they reported as expenditures things that were not expenditures.
No, it's not the categories, it's the total that I care about.
Total
Total.
financing.
Forget about the details. So you think that somebody put money in their pocket and said, okay, this was 100, we're going to report 80 in the balance.
Yeah. No, that's not.
Other countries report 100 and then a payment to a consultant for paying 20. So it's the same, it's still 20, but still get the 100 because they account the numbers. So Bolivia is
Where it's
different
all
in that
just
sense.
cash under the table and everything.
But in transfers,
Yeah.
there are.
Yeah, there are.
Those are reported.
Those are reported.
Maybe we'll just
Then you can get it.
and see what can be done.
So this is like, this will be like the United States. So we have public interest, Fed, and they have this big, so they report how much of the balance sheet is. They report transfers. Those are big numbers.
Looks great. Martin.
I'd like to make a comment on the last comment that Fernando did about the leverage effect of commodity prices and growth in Latin America. And looking at the Brazilian correlations, I would see that besides the fact that the fiscal side improves, you have also the fact that certain stocks, which are the main deterrent of growth in Latin America, the likelihood of those diminish a lot when commodity prices are low. So foreign investment come in big time. And then you have also appreciation. And in Brazil, investment rates go hand in hand with appreciation. When capital goods become cheaper, then the investment rate goes up, exactly the opposite of many people say that because the exports will be better, etc. But so I would say that capital flowing in and appreciation are a big thing.
You know, I think my view is just going up constitutional decay to figure this out. Just, you know, someone else could then write a paper.
Actually, I have another question.
Yep.
Does Bolivia and some other countries tax exports? It's unconstitutional in the United States to tax exports. It's not
Argentina taxes
Yeah, taxes.
taxes
One of the main taxes.
10 years.
in Bolivia, they're direct taxing exports. What about imports?
Tariffs?
But the answer is yes, yes, and yes. It's also constitutional in Argentina. It's not a tax, actually. We are lying. It's
Yeah,
it's
well-
called a special decree or something, but it's the main tax rate. One of the main.
For example, now the main revenues for the Bolivian dollar is exports and gas.
So one of my.
But that's not tax. Because
That's not tax, that's because they own it.
They own it. They can basically put 100% tax on the capital and then they keep the profits. It's not like a tax. It's owned by the consumer.
No, but it's also tax.
It's also tax. It's also tax.
It's called the
The exports.
IRCD, impuesto directo a los mercados.
To the exports. Yep.
So one of my friends at the Fiscal told me that Argentina copied the U.S. Constitution, but they didn't copy it.
No,
they did.
No, that's what I tell you.
It's just that it doesn't mean the same.
These
It only
don't
takes
follow.
a
It's not a code tax.
Oh, it is a constitution? Oh, I see.
It's done with a presidential
Yeah.
decree.
Just
It's like,
somebody's-
say like the presidents here when they want to put a...
But it is got a constitution.
It's unconstitutional.
Because I know from my fishing friends that people in Argentina take the Constitution very seriously.
They do.
such a vibrant document that can be changed by a memo.
On that line, we close the session.